Welcome to my weekly update with me, Rich Perry, market analyst at Tech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, certainly moving on from non-farm payrolls on Friday, we had a fairly interesting reaction on the dollar because the dollar started to fall. That is despite the fact that we had a headline payrolls number of well above 200,000. Normally that would drive the dollar higher, but this time, and certainly in recent times before, we've had the market focusing far more on the average hourly earnings, which came in disappointingly, and that started to see the market sort of factoring in perhaps a less strict tightening cycle on the Fed's part. Certainly March is being questioned now, and the prospect of 2 rate hikes in 2017 is more likely as a result. So what we're seeing is the dollar under a little bit of pressure. We've actually seen the dollar pulling lower actually in the last sort of few weeks anyway, because the market has been becoming increasingly concerned about how Donald Trump is reacting in his protectionist policies that he's putting into place. And that is impacting across Forex markets, across commodities, and also the risk sentiment generally. You're starting to see the safe haven plays getting more of a positive run higher. You're seeing the likes of gold pushing on. You're seeing the yen also strengthening and outperforming. And it's also interesting that we're seeing this, as we can see on the chart that I've got here below, the slight sort of divergence of the positive correlation that we had previously between the 10-year yield on the Treasuries and also the dollar. That dollar is starting to fall away, despite the fact that 10-year Treasuries are pulling higher. So we're seeing that move playing out, and exactly how that reaction continues remains a big driver, I think, of how markets are going to be moving. So what we have got on the Forex front is euro dollar, which had been pulling higher, but it's consolidating a little bit over the last week, and that uptrend over the last sort of few weeks is now being tested whether it starts to roll over. The technicals are being a bit tired on the upside. Maybe the support at 107.10 will come under pressure this week, but 105.77 is the key support to look out for a big breakdown and a return to the bear control there. On cable, it's interesting, it's pulled back, still in a range play, pulling back towards 124.30, big support there, and if that breaks the downside on a closing basis, you could then see again a move back down lower. These are all strong dollar plays, but at the moment it certainly looks as though that the dollar yen is not a strong dollar play, because the yen is the strong currency on this pair. We've seen the market that is sort of testing that key support around 112.50 on a closing basis, 112 big figure on an intraday basis, and if those levels break to the downside, then that again reopens and move quite strongly lower. Look at the commodity prices, the commodity currencies, the Aussie, the Kiwi, they've actually all rallied higher. You're seeing those coming up to now test some key resistance levels, and also $1.30 on the dollar CAD chart is a big level that the market will also be looking out for. So some key levels are being tested on these Forex trades at the moment. Now, looking on your equity markets, as I said, sentiment under pressure from these protectionist policies from Donald Trump. So the equity markets had stuttered a bit. You saw a bit of a jump on the Friday on the back of the payrolls report, which, as I said, puts back to a certain extent a little bit of that tightening pressure which markets would like. So the markets jumped a little bit on Friday, but as to whether that can continue with Donald Trump sort of on almost autopilot now in terms of coming up with new policies and saying things through his Twitter feed that are impacting market sentiment, it'll be interesting if that equity market correction continues. But certainly FTSE has sort of picked up again around the 7,100 level. You've got the S&P 500, which, to be honest, has found a bit of support, 2267, but the DAX sort of is the one that looks to be under pressure. The DAX sort of pulling up and finding resistance around 11,700 now, and that is the one to look out for. So in terms of your commodity prices, well, as I said, the stronger dollar is weak for commodity prices, but the dollar has been correcting of late, so the commodity prices have started to rally, and certainly the gold price pulling up above $1,200, testing the key resistance around about 1220. Needs that on a closing breakout, that will open 1240 to 1250. In terms of your silver price, holding up about 1720 is important, and also the oil price, which on both WTI and Brent crude are trading around about $5 ranges, really, sort of 50 to 55 on WTI, 53 to 58 area on Brent crude. So still those markets remain range bound. Now, in terms of your economic calendar, not a massive amount that we're looking out for this week. We've got a little bit of Chinese data towards the back end of the week with the trade data. You've got US trade balance first of all, but again, nothing really to sort of do a great deal to move these markets. In terms of your specifics, you've got the RBA giving monetary policy and the RBNZ, the Reserve Bank of New Zealand, both sort of will presumably impact the Kiwi and the Aussie, but again, nothing really expected to happen from these markets, from these central banks that would impact the markets to too great a deal. So nothing too significant to look out for, but obviously Donald Trump remains the key factor. So I wish you good luck in your trading this week, and I'll speak to you next time. Thank you.